Hey everyone, if you're like me and you're watching the chip sector, then this is an explainer you really don't want to miss. We are going to dive deep into what's happening in South Korea, because frankly, the entire rulebook for memory stocks is being rewritten as we speak. So this is the whole thesis right here. For years, right, we've all been trained to see memory chips as this volatile, boom and bust industry. But the case I'm going to make today is that this time is truly different. The fundamentals have shifted for good. Okay, before we get into the weeds, just the quick legal bit. Today's date is February 27th, 2026, and remember, all of this is for your information only. It is definitely not financial advice, so please do your own homework. So here's how we're going to break it all down. We'll start with the main idea, hit the executive summary so you know the conclusion up front, and then we're going to build our case with 3 key pillars of evidence before we get to the final bottom line. It's a logical path to understanding this massive shift. All right, let's get right into the thick of it. We are talking about a fundamental structural change in the memory market. This is not just another upswing in the cycle. No, this is a completely new era, one that's being forged by the just unbelievable demand from AI. Now, before we unpack all the data and the evidence, I'm going to give you the key takeaways right now. Yeah, I know, kind of backwards, but I want you to see exactly where we're headed with this argument from the very beginning. Okay, here it is. The bottom line is that we are in a structural supercycle. AI is creating a gap between supply and demand that just can't be closed easily. And what's the result? Well, the suppliers, we're talking about South Korea's Samsung and SK Hynix, they now hold all the cards. This gives them pricing power like they've never had before. And for us as investors, that points to a very positive outlook for these stocks. Okay, let's build this case. Pillar number 1, pricing power. You just have to look at the numbers. They're off the charts, and they are the clearest signal we have that this market has changed in a fundamental way. Just look at that number, 130%. I mean, this isn't some minor adjustment. This is an absolute explosion, and it's being forecast by Gartner, a top-tier industry analyst. When you see a number like that, the market is basically screaming at you that something profound is happening. And this just shows you how fast this is all happening. We are not talking about a slow, gentle curve here. This timeline for a standard, everyday DRAM chip shows the price jumping from $1.30 to $13 in less than a year. That is a rocket ship, plain and simple. And it's showing no signs of slowing down. And get this isn't just some weirdness on the spot market. No, we're talking about major, long-term contracts. Suppliers are telling their biggest customers that if they want to guarantee supply for the second quarter, prices might more than double. The whole conversation has shifted from, hey, what's the best price, to, can I get any supply at all? That's a seismic power shift. So what's behind all this? Where is all this insane pricing power coming from? Well, that leads us right to pillar 2, a demand shock like we have never seen before. And it's critical to understand. This isn't just about more of the same AI, it's about a totally new kind of AI that is just gobbling up memory. The term you need to get used to hearing is Agentic AI. And look, this is not the AI that just answers your questions. We're talking about AI that can actually do things, complex, multi-step tasks all on its own. Think of it as the leap from a simple calculator to having a personal research team in your pocket 24/7. And that requires an absolutely exponential amount of memory. And this quote from an industry insider just says it all. When the world's biggest tech companies completely stop negotiating on price and are only focused on locking in supply, you know the demand is overwhelming. It is a seller's market in the most extreme sense you can imagine. And if you need any more proof that this isn't just some short-term crunch, here you go. We're sitting here in early 2026, and industry reports are already confirming that the entire memory supply for 2027 is sold out, gone. That's not a cycle, my friends. That is a deep structural shortage. Which leads us perfectly into our third and final pillar, right? You're probably thinking, if demand is this crazy, why don't suppliers like Samsung and SK Hynix just build more factories? It's a fair question. The simple answer is they can't, at least not nearly fast enough. The supply side is structurally constrained. This visual, this just says it all, doesn't it? On the left, you've got a skyscraper of AI demand shooting for the moon. And on the right, that tiny little shack represents the entire expected growth in production capacity this year, about 7% from SK Hynix and even less from their competitors. The gap is just enormous. So what happens when you have a gap like that? Well, it completely flips the entire market dynamic on its head. For decades, the big tech buyers had all the leverage. Now, the memory suppliers are firmly in the driver's seat. The contracts are written on their terms, and the most important question is no longer, what's the price, but can I even get on the list? And hey, don't just take my word for it. This is coming directly from Samsung. The world's largest memory manufacturer is openly admitting it can only meet about 60% of the current demand. That 40% shortfall, that is exactly where this new incredible pricing power is coming from. Okay, so we've laid out the three pillars. Let's tie this all together now and get to the bottom line for us as investors. What does this all mean? You see, it's the combination of these three forces that changes everything. You have explosive pricing, which is being driven by a structural long-term demand shock from AI, and it's all locked in place by a structural supply shortage. So the big conclusion is this. This isn't just another temporary peak. This is a fundamental re-rating of the entire memory sector. The old rules of the cycle, they just don't apply anymore. So I'll just leave you with this to think about. If 2027 supply is already gone, and the demand from Agentic AI is just getting started, the real question isn't if prices will keep rising, but just how high can they possibly go? Thanks for tuning in.